So we'll be starting. So today we'll talk about crypto fraud, and I'll start with introducing our speakers. Henry Hillman is a doctor and lecturer with Cardiff University in Wales, and we've met at ACFE UK chapter conference in fall 2023, and I really liked how clearly and interestingly Henry explains the issue of cryptocurrency and fraud, and I thought it would be helpful for everybody, for our clients and guests to have a benefit of learning a bit about it. And you're very welcome, Henry, to introduce yourself and your background if you wish to.
Yes, good morning, everyone. As has already been said, I'm a lecturer at Cardiff University. I specialise in financial crime and particularly cryptocurrencies and financial crime, namely money laundering, fraud, and terrorist financing. So yes, good morning, everyone. I apologise that I can't be there in person.
Yeah, the idea was that Henry is here today with us, but due to logistical reasons it wasn't possible. Maybe Wales is too far from London. And Viktor Rykov is a solicitor.
Yeah, senior even.
Senior solicitor. We know Viktor from multiple different law firms, but now you're with Belgravia Law. Can maybe you tell everybody a bit about yourself, Viktor?
Yeah, so I'm now with Belgravia Law. This is dispute resolution boutique. We do a range of work, sanctions a bit, dispute resolution quite a bit, and I personally adore everything related to IT. I did my LLM with focus on IT. I was crypto enthusiast for like several years, like did some investing myself, but usually was following like legal trends. So I find myself as a IT lawyer, and will try to share what I know about that and about trends today with you at the end of this session, I suppose. So.
Yeah, and quickly, while Swami is switching the slides, I'm Michael Lastovskiy. I'm founder and CEO of Neo Forensics, private investigation firm based in London, doing global asset tracing, asset recovery, dispute support, and fraud investigations. And I'm also really interested in crypto. I also tried some investments in crypto, not successfully, but it was very minimum amounts. And I think we're getting more and more requests. I thought it's interesting to talk about this from legal standpoint, investigative standpoint, and of course from theoretical standpoint. So let's go to Henry's part, crypto and fraud theory. So Henry, the floor is yours now.
Thank you very much. So I think I've got the outline slide up at the moment, just to set out what I want to do, which is to identify what cryptocurrencies are in as non-technical language as possible, have a little discussion about what I see as cryptocurrency users, typical cryptocurrency users, and then identify some of the advantages and disadvantages of cryptocurrencies. Next slide, please. This slide, I must apologize for a lot of text on it. It basically covers what cryptocurrencies are in a nutshell. They get described as distributed, open source, math-based, peer-to-peer virtual currencies. I'm sure that therefore everyone now knows exactly what a cryptocurrency is, so I might as well leave it there. I joke. It's mainly something that it exists without any central oversight from an organization or bank, as you may think about it. And that's the biggest difference, I'd say, between a cryptocurrency and a fiat currency. Fiat currency being our central currencies such as pounds, dollars, euros, etc. They will all have a central bank that can have an element of control the distribution of the currency and its production, and also be able to redeem the currency as well. That's not possible in cryptocurrencies. Instead, it is all managed by code, algorithms, and the activity of the users of that particular cryptocurrency. I have on the bottom of this screen the Bitcoin logo, and it might be the one that everyone is most familiar with. But on the next slide, I've also got some other logos of cryptocurrencies that you may or may not have seen already. Essentially, all cryptocurrencies have their own USP or unique selling point. And on the screen, I've got Bitcoin as the sort of original cryptocurrency. But we've also got Ethereum, which is that diamond, the black and gray diamond in the bottom left. And that cryptocurrency allows you to run simple applications on its blockchain as well as undertake transactions. So the Ethereum blockchain is what gives us the basis for non-fungible tokens, NFTs, which you may have heard of as well. And that allows us to have the exchange of those on that particular type of blockchain. Additionally, on the screen, I've got the Litecoin logo, and Litecoin is an example of a cryptocurrency that offers its USP as being transactions that can happen quicker than on the Bitcoin blockchain. So in Bitcoin, as I'm going to explain more, average around 10 minutes per transaction for them to be approved, whereas on Litecoin, it can be much faster. There are, as I alluded to on the slide, over 9,000 cryptocurrencies listed. You can look at these yourself on websites such as CoinMarketCap. Others exist as well. But the last one on the screen I wanted to show just to the sort of informality of this particular market is that some cryptocurrencies exist entirely as a joke, and yet can obtain or grow to have significant value. So Dogecoin is the example on the screen there. Some of you may have heard of Dogecoin. It existed simply to prove that anybody could create a cryptocurrency, and it adopted the already existing meme around Doge. I say Doge, some people say doggy apparently, but I think it's Doge. And it also gained prominence as well because prominent individuals in the cryptocurrency market or cryptocurrency sector have tweeted or made comment about Dogecoin, such as Elon Musk. I'll try and make that the last reference to Elon Musk in my talk. But his tweet about it rose its prominence and therefore increased its value in and around 2021, 2022. So we have this market that is very developing, informal, could say immature as well, but it has also attracted some significant values of money as well. Next slide. I just wanted to quickly base this, or just partly justify why I'm talking about cryptocurrencies in terms of where they are used. And what this slide demonstrates is that a significant proportion of cryptocurrencies are used in Central, Northern and Western Europe, which according to this research was by a company called Chainalysis, and they produce these reports annually. I confess this is from the 2022 report, because the 2023 report contains the graphics in a slightly less stealable format from my perspective, so they were harder for me to put on the screen. However, the data is very similar, apart from that the top two seem to have swapped places. So last year, 25%, just under, was taken place in North America, whereas around 18 was in Northern, Central and Western Europe. So we see a slight swap there, but very similar facts. What we can also see is that quite predictably, where there is more reliable internet and more reliable infrastructure, we will see more cryptocurrency use. As you can see, I don't know if they're particularly legible for you, but the smallest numbers are in more or less developed countries or less developed areas of the world, such as Africa, and there are parts of the Middle East and Latin America that form quite small quantities of cryptocurrency transactions. So not clear cut, but slightly it's like general trend towards larger infrastructure and more developed countries operating more in this cryptocurrency sphere. On the next slide, we also see that the UK is a prominent area for these cryptocurrency transactions to take place within the Central, Northern and Western Europe sector of cryptocurrencies. And so these are last year's statistics, and we can see that the UK is quite some way ahead in terms of the values of transactions received into the UK. I think that justifies discussing cryptocurrencies. On the next slide, I'm going to briefly try and explain how Bitcoin in particular works. I've got 2 slides to try and cover this. So Bitcoin was the first internet cryptocurrency that I or anybody is aware of, to my knowledge. It was produced in the wake of, or it was first launched in 2009 in the wake of the financial crisis and during a period of distrust of central banking or distrust of traditional finance, to give us a backdrop as to maybe why it swelled in terms of its existence. But Bitcoin being the original, it's produced through a process called mining. Now, that isn't pickaxe mining. It's a case of your computer trying to solve complex algorithms. And even that's a bit of a misnomer, because it's not trying to solve a complex algorithm. It's actually just trying to guess the correct answer to a problem. And it's not doing any maths to try and do that. It is just firing numbers at the system until it receives the system receives the correct answer. The first computer, or node as it's called, to send the right answer in receives the block reward, and that block reward currently is 6.25 bitcoins. It started out at 50 and has been halving every 4 years roughly, or 100,000 blocks. It roughly works out at 10 minutes per block. That's the idea. The average is intended to be 10 minutes per block. That's a rolling average. Some blocks are solved earlier, some blocks are solved later. Depends upon how quickly the random number is found by the community of computers or nodes. But presently that works at an average of 900 bitcoins being produced per day. Bitcoin's highest value, I've had to update this slide recently, has lifted to $73,000, over $73,000, and at that value, if it had stayed at that value the whole day, over $66 million of value had been added to the Bitcoin market cap at that value or that day. It doesn't stay at that value for long. We're seeing at the moment it is hovering around the $60,000 per Bitcoin value. So presently around a mere $54 million is being added to the market every day instead. So it's no small amounts of money. However, any of you in the room that are familiar with how many dollars are transacted per day or pounds are transacted per day, it does still pale into sort of being quite a small number in relation to global transactions, but it is still a significant amount of money, I would argue. On the next slide, just to give a bit more detail about how the network runs, it's based on what are described as repeated actions. And these points are taken from the Bitcoin white paper, which sets out how Bitcoin blockchain should work. So the first thing is that all new transactions are broadcast to all nodes in the network. So when you try and undertake a Bitcoin transaction, you don't undertake it immediately. And you also, to compare it to a bank transaction, you don't just tell your bank that you want to undertake the transaction. You effectively tell everyone in the Bitcoin network that you want to undertake this transaction. So you broadcast it to all the nodes. Every node is collecting all those transactions into the next block on the chain. Each node is also working to find proof of work, so they're firing the random numbers at the algorithm until they get the right answer. When the first node finds that proof of work, it broadcasts all of the transactions in its block and puts it onto the broadcasts it as a block onto the blockchain. The nodes accept that block only if all of the transactions in the block are valid and not already spent, and the nodes express their acceptance of that block by working on creating the next one. So we return back to step 1 at that point. And to try and explain that hopefully more simply in those in my very rudimental diagram at the bottom, block 1, 2, 3, 4, 5 is a block on the chain, and then block 1, 2, 3, 4, 6 will contain all of the transactions since block 1, 2, 3, 4, 5. So you're trying to then see that you can, with this blockchain, all it is this selection of it's a ledger broken into these, what to say, chronological blocks that just depict every single transaction that has been accepted on the Bitcoin network. And these will be independent for each cryptocurrency. So for every publicly available blockchain, the cryptocurrency will show all the transactions that have taken place since that network began. And that's how we form Bitcoin wallets and Bitcoin accounts, is by looking at this network and knowing where the Bitcoins have been to know where they are now. The next slide, I just wanted to highlight some of the key characteristics around Bitcoin that make them potentially interesting or appealing from a financial crime perspective and just from an innovation perspective. So we've got their speed, approximately 10 minutes between blocks. That is in some cases slower than Phi-8 transactions. Some transactions go through very quickly, but in lots of cases it's much faster than Phi-8 transactions, particularly if I want to send money cross-border. There's high levels of privacy, sort of high levels of anonymity. It's not total anonymity, and Viktor and Michael may go through more of that as we go through the rest of today. It's transnational, and I describe it as transnational rather than international because as far as cryptocurrencies are concerned, borders are irrelevant. National borders mean nothing to a cryptocurrency transaction. They're irreversible. You can't undo a transaction. There's high levels of security. They're very difficult to confiscate, as I'm sure will be spoken about later today. And the decentralized nature means there's minimal interference or ability for humans to interact with transactions or amend them because of that decentralized nature. So the next slide looks at the common traits I think I've identified or have been identified in cryptocurrency consumers. And those are lacking trust in mainstream media, looking for next shortcuts, and acting on influential recommendations. Now, this research was done on behalf of the Financial Conduct Authority by, I believe it was Revealing Reality. And I think these are important traits, particularly when we're considering fraud and financial crime, is because these make for more vulnerable victims, or more basically more appealing victims when it comes to a fraud perspective. Because if you're ignoring mainstream media, you're going to be ignoring lots of public warnings or or news stories around cryptocurrencies or around known frauds. If you're looking for the next shortcut, you're likely to be slightly blinkered, or you're not likely to be looking for the pitfalls or the things that are going to go wrong. And if you're acting on small or influential recommendations, then you're not going to be getting your information from unbiased sources. If you're going to rely on an influencer or a sort of as I say, an influential individual in the market, they're going to have their own reasons for promoting a particular cryptocurrency. They're not going to have your best interests at heart. But these characteristics mean that I would say that cryptocurrency consumers or users may be more at risk for cryptocurrency fraud. This might make you think, well, why does anybody want to use cryptocurrencies? They look dangerous. You've got lack of security. The only uses are surely financial crime. On the next slide, I try and highlight some of the appeals for victims. Now, I apologize for the slight lack of professionalism, particularly on the furthermost factor in why cryptocurrencies are appealing. But I'll start with the on the left. Liquidity of their asset is quite an important factor in why a cryptocurrency is appealing, because you can buy and sell it very quickly. There's 24-hour trading. Cryptocurrencies don't stop when more traditional markets do. It's open access. You don't need to have any licenses to trade in cryptocurrencies. You may have to have specific licenses in certain jurisdictions now, but they're fairly avoidable. So you don't need to, it's open access in that sense. there is a potential to make huge profits and this is one of the reasons that feeds into that the next shortcut appeal of or trait in cryptocurrency traders. There's that if you're the person that gets into a particular cryptocurrency early, let's say you bought Doge before Elon Musk tweeted about Doge, or you were into Bitcoin in 2011, then you now could be sitting on a gold mine. Those stories fuel this idea that you can make massive profits in cryptocurrencies and draw people who are looking to make those next shortcuts and make that money. And my last point there, I know it's a loose one. Crypto is cool. There's a lot of hype around cryptocurrencies, and they're a new phenomenon. They offer a new thing, and using even more professional terms, a shiny thing. It's something that therefore attracts people to it because it's this novel concept, and there are loads of new things to explore underneath it. I would argue there are lots of things that aren't new about cryptocurrencies, particularly when it comes to frauds and coming back to that idea of nothing new under the sun. But it is this new concept, and it does attract lots of people for those reasons. However, there are still those vulnerabilities. So next slide looks at why I think they're particularly vulnerable. And some of these mirror the previous slide, or some of the things I've been talking about already. So those potential to make huge profits mirror that. You've got those volatility in the values, and that if you invest in a cryptocurrency at the wrong time, you risk losing lots of your money. There's a lack of regulation in cryptocurrencies. They are very difficult to regulate. Efforts so far are focused on trying to regulate particular users or service providers rather than users, but it's quite a difficult market to regulate due to its decentralized nature. And then lastly, it is rife with scams because of the factors I've already mentioned. But it's very prolific within cryptocurrency markets for there to be false advertising or false promises about what is being offered and what actually ends up being given. So that final diagram on the bottom there basically highlights the fact that you don't know who you're dealing with on the other side of the screen. That would be a point for me to have had some fancy reveal of what my screen actually shows, but I haven't got that set up today, sorry. But yes, this idea of that you don't know who's the other side of the screen is a real vulnerability in cryptocurrencies from a fraud perspective. I think that's my slides. So I'm going to pass back to Michael in the room.
Thank you so much, Dr. Hillman. It's super interesting. I'm listening to this presentation second time, and I find it quite educating. And I hope that the respectable audience also finds it educative. And now, after the theoretical part, we wanted to discuss a bit about practical part, because as Henry mentioned, the cryptocurrencies are quite susceptible to fraud and vulnerable. And therefore, we as an investigation firm, and I'm sure legal colleagues as lawyers, have a lot of client requests about crypto fraud cases and recovery of the losses associated with it. Therefore, we've thought that we will discuss from practical standpoint how to investigate crypto fraud and how to institute legal proceedings in order to recover losses. And we'll try to make it less about the slides, more about live conversations. In the coffee break, we had a few conversations and realized that actually it would benefit from a round table discussion, because colleagues have their own cases with crypto, and maybe next time we will have a round table with 5 or 6 people talking about crypto fraud cases. But let's just discuss crypto fraud from practical standpoint. Can you put on next slide, please? So, Viktor, first, let's start with the most interesting part, a war story. A war story is just an interesting case from a practice. Do you have anything to share with people from your experience?
I mean, I have one maybe not very classic case, and I believe that in this case it's not litigation, it's rather negotiations with authorities over the frozen crypto USDT on Tether blockchain. It's actually Ethereum blockchain, but USDT as the you understand, bound to USD value. And that relates to the fact that authorities do not necessarily implement the most reasonable approach when they decide to put the freezing order, or like to send it to the basically blockchain, let's say blockchain guys, so to say, who manage the blockchain network. Yeah, in that case, which we have currently in my firm, basically there is a crypto exchange which has like medium crypto exchange, around like several $1 million worth of crypto assets were frozen, and the problem is that it apparently had connection with some fraudulent activities. However, instead of providing crypto exchange with the information that these particular transactions are fraudulent and we consider them to be fraudulent, therefore we please do not transact with these and these wallets, they actually froze the general wallet with all mixed assets which is used by crypto exchange. So just maybe to clarify a bit, yeah. So when you come to the crypto exchange for the over-the-counter transaction and ask them to make some transaction on your behalf, you most probably will pay them some crypto, and before putting that crypto in their mixed wallet, they will put it in the separate wallet bound to specific user, to specific request. And then if no IC is fine, if there is no problems with like some safety checks via tools which they use, they will put in their own general wallet, and then after that they will already distribute it to like some other, like whatever purpose of your transaction is. So in that particular case, what happened? The crypto exchange has some clues what might be the reason of the freeze, but they do not have information from authorities. They just have basically full-scale ban on any operations from their general blockchain address, and they cannot do nothing until they receive further information. However, what potential fraudsters know that this particular exchange will not accept their requests anymore, and basically what fraudsters can do, they can on the background deal whichever way they want with their remaining assets. Yeah, and if we, for example, assume that, as our client assumes, that from these 2 million value, only 100,000 pounds, like dollars worth of money, of funds is related to specific fraudsters, and it's already, I mean, they encountered that problem last year, somewhere in November. We're still in discussions with authorities. We still did not receive information which specific assets triggered the freeze. But the fraudsters might learn it somehow from the fact that this crypto exchange cannot operate and cannot accept new requests for that particular wallet. That means they have plenty of time to deal with other fraudulent assets the way they want. So the takeaway from this story is that even 10 plus years already 15 years in the crypto existence and the crypto being used alongside usual fiat currencies, authorities, even such, these specific authorities I'm mentioning is actually FBI, so they requested Tether to freeze particular wallet. They still make some, it seems to be childish mistakes, at least from the perspective of practitioner, which do not allow us to serve the client well, and does not allow us to separate assets impacted by fraud from the assets which are actually clean and where no IC is in order and which can be used like further. So that is, I don't know whether it's bright enough, but this is the story from my practice, quite recent, which I wanted to share.
Thank you. I have our story to share, but because I think we are a bit tight on time, I'll keep it to the end. If we have no Q&A session, or if you have no questions during Q&A session, I'll tell you the war story from crypto, because it will take a few minutes to explain. But next slide, please. The lesson I learned is this is fiat. Fiat is the normal currency, like dollars, euros, GBP. This is fiat money laundering scheme perpetrated by fraudsters on a large scale on one of the banks in Central and Eastern Europe. And the reason I put that slide is that you see that how complex is it for fraudsters to launder money from multiple jurisdictions and multiple related parties to get them finally invested in more established Western jurisdictions. So it's a complex maze of transactions from monies taken from a bank and ultimately through laundering reaching the destination. Let's say destination investment in a property or in a jet or in a yacht or maybe on a bank account. Very similar picture if you look at the crypto laundering. It's very similar. It's just instead of the, I believe it's Latvian flags there, you would have nodes in the ledger. And instead of the ultimate destination, such as, for example, different countries' flags, you would have the end wallets. But it's very, very similar. So the idea is that fraudsters operate just using different technical means, but all the same techniques and practices. So money laundering goes all the time in the same fashion. And it's very difficult for investigators to investigate through this maze of transactions because this picture is very small. It's just simplified. In reality, if we print out the real money laundering picture, it takes like, we have to glue together a lot of A3 pieces of paper just to draw the flows of money and then go through them. This is a very condensed picture. And the same picture will be if you try to draw the diagram or the chart, flow chart of the crypto laundering. The idea is that you can spend months and months investigating the movement of money or cryptocurrencies through this maze of transactions, but you can go different ways, more efficient, because it's all about cost and time. The idea is that it's all about people anyway. The fraudsters are people, human beings. And if you understand the psychology of people, and in particular fraudsters, it's all the same. It doesn't change from 100 years ago, 10 years ago, and current year. It's all the same. People do the same mistakes, people do the same type of decisions, and therefore the idea for investigators is that instead of following money, and especially not fiat money, which are more or less possible to trace, instead of trying to follow cryptocurrencies, you can follow people. And as far as I know from, I apologize for these emails coming in, instead of trying to follow money, you can just follow people. If you know who are your fraudsters and their location, for example, you then can try to find their assets. And the assets, because fraudsters don't keep just crypto. They want to enjoy life. They want to buy some goods, high value goods, or properties, or maybe, like in this picture, the vessel, the yacht. People don't want just some figure sitting in their crypto wallets. They want to enjoy life. Therefore, if you follow people, follow fraudsters, you can find their assets. And this actually forms the basis for subsequent legal action. Because ultimately, in the end of the day, any legal proceeding, civil fraud or criminal, the idea is to recover losses to victims. That's why our idea of investigating is more old school. It's quite obvious. Follow people, don't follow money. Of course, money tracing or crypto tracing is required, but only after you identified the end goal, which is the assets. And there are different tools. If you can put the next slide. In the tool set of investigators, and I put in investigative tools here, and I can describe some of them to you in this presentation. But there's also a lot of legal tools, and as far as I know, Viktor, sometimes you, through legal means, through disclosure orders, third-party disclosure orders, for example, knowledge pharmacal, can gather information which we investigators are struggling to get in other ways. So maybe before we dive into the investigative tools and techniques, you can share with us what can we do through legal means.
Yeah, actually, I just also wanted to come back on your point from your previous slide, because you mentioned follow people, yeah, and which of course makes perfect sense. And sometimes crypto cases, I think some of you might heard that one crypto case was resolved because one fraudster basically bought latte or I don't know, some coffee using crypto wallet, which was previously muddled in the fraudulent activities. So, but before you come to this stage, and usually if you are the victim of some scam scheme or whatever, you are trying to follow the crypto as the first stage. And the good thing is that English courts are quite innovative in their approach, and you can try to get a freezing order, and you can try to get an injunction which will allow you to kind of secure this crypto inside of the centralized crypto exchange, for example, if it is there, or on the specific wallets, yeah, if you are sure that this is where it went, and that is the way to go. But you might not know at this stage, because some of you may know, and you may know as well, that these cases usually are titled like X against persons unknown, and basically you're trying to get this injunction, you're trying to secure asset, and alongside investigators will be working, with lawyers and with forensics tools, trying to find traces of these people, like of this personal touch, so to say. Coming to actual disclosures, and I would not add much here. I will just say maybe that English courts, they trying to keep up with what crypto suggests, and there are additional gateways available. There is now opportunity to serve injunctions even by NFT, or by using I don't know, going into the chat, being sure that okay, this person with whom I chatted in specific, I don't know, product hunt for some reason comes to my mind, but whichever social network you have, just serve there, and that's it, because it comes then not from the problem of crypto as such, but from the problem how English system is construed. So English court is concerned about service, because jurisdiction is established if service is fine. Yes, I mean implied, assumed, and then another party may dispute jurisdiction. But the problem is that if you are a fraudster, you're unlikely to do that. You are waiting. Maybe they will not find me. Maybe they will not divulge my identity. I will be able to hide it behind the crypto wallet addresses. And that's it. So I would say that from the disclosure perspective, from the perspective of assisting forensics, it's very much a question whether you can pass English courts gateways, and there are plenty available options for you as soon as you can, again, come into first part of my, long speech, whether you can actually say, okay, this is a crypto tracer. And I'm coming to the question from the colleague there, maybe address it to you back. Did you have any experience with crypto mixers? Or do you believe that maybe from your banking transactions logic can be applied there? Meaning whether it's totally anonymized after it went to the mixer, or maybe you can apply forensic tools, try to follow it?
We had experience. We saw crypto mixes, and it's more difficult to apply classic methodologies, because in classic fiat currencies we have FIFA, LIFA, first in, first out, first in, last out, or last in, first out. We have specific tracing where you know basically how you trace certain monies through the network of companies With crypto, it's a bit more difficult, and after putting cryptocurrencies through Mixer, it's much more difficult to establish the origin of the funds. Therefore, the whole idea of investigators is to apply this, buying coffee logic, because as far as I know, I spoke to law enforcement colleagues, to police, how the actual cases with cryptocurrencies are resolved. It's in old school, old-fashioned ways. People anyway use money mules at some point of the money laundering. So because crypto is in the end of the day converted into cash, into normal currencies, and cash is carried. And the easiest way for police, for example, to find the perpetrators of fraud is to follow this low-level employees in quotation mark, organized crime employees. Then they carry out very specific duties. It's called money mules. They carry money. And this is how difficult cases are really cracked. There's so nothing too fancy. They just find people who take money from point A to point B, and then these people are taken in and interrogated or interviewed, and they start to give the witness statement indicating who are the actual fraudsters for whom they work. And the same logic, speaking to private investigation industry, the same logic applies to investigating crypto scams. For example, the case I wanted to tell you was when the specific person in the UK was defrauded for about £2 million. How it started, he saw the advertisement on the through Bing or Microsoft search engine of certain investment opportunity, and he followed the link, and it looked super legit. And then his first investments were made through a legitimate platform. But then somehow, slowly, and fraudsters know it, he started to get more and more involved with the crypto side of investing, because they were trying to say, okay, you invested in shares, now let's try more lucrative, more profitable instruments. As Henry mentioned, crypto promises quick wins, and a lot of people want quick money without much risk. And they lured that poor person into the investing all his life savings, it was £700,000, 40 years of his personal business savings went in bits of 25, 50,000 into investing in crypto. And step by step, they started to communicate with him about the company here or cryptocurrency there. And they communicate through WhatsApp. WhatsApp, as you know, it's tied to the mobile phone. So for investigators, it's very hard to find the fraudsters because it's all fake names. The companies are shell companies which disappear, and they're registered into nominees. But what you can do with a phone call, if you have a number, it's called triangulation, cellular triangulation. Any phone connects to three base networks. Like even now we are sitting here, we are connected to at least three 3G, 4G or 5G stations around that building. And that 3 points give you approximate location of the cell phone, depending on the strength of the signal. Now, billing records from the mobile companies contain the information to which tower the phone is connected. So if you can apply legal instruments such as knowledge pharmacal order to serve on the third party, which is, for example, T-Mobile or O2 or any Vodafone, you have to know the number. By knowing the number, you would know which company operates it. Like, for example, you know that this is Vodafone mobile number. And then if you successfully request through the court order here in England disclosure from mobile services provider of the billing records, and billing record contains information about towers, you can by date identify approximate location from which the call was made, and then you start to reconstruct this back in time, and you can understand approximately where the fraudsters were calling from. And this step by step, it starts to narrow down basically your location of fraudsters, and this brings you much closer to the real identities of some of these people. This is how real fraud cases in crypto were solved from the industry. I've been told very complex cases. So again, follow people, the principle, find the weak point. That's why I was asking, like, if legal instruments, what legal instruments are successfully working in the crypto space, crypto investigation space. So for us, investigating people and receivers of the stolen funds or investigating fraud perpetrators by locating them is much more profitable, efficient way to try to resolve. Once you get fraudsters, you can profile them. You can serve certain injunctions on them, or you can freeze their assets, or you can even report to police. There are different strategies to deal with them. So reconstruction of the sequence of events for forensics is very important. And yes, we don't have police powers. We cannot go and, for example, do a search on premises. But there is also an instrument called civil search, as far as I know, in certain jurisdictions, where if you find the office location where you think the fraudsters were operating from, again, you can apply, as far as I know, to the court to be able to perform civil search and get the documents. And this is where, in these cases, in the building, you can hopefully locate a piece of equipment, computer, maybe camera, maybe printer, maybe scanner. All of these devices contain very valuable information for investigators. Yeah. For example, you may not know, but every scanner, like big machines which you use in your office, it contains the history of all the prints and scans for years, because there is internal hard drive. And investigators can pull it and analyze it, and therefore people think that if they scan something once and then shred it, they lose. There's no evidence. There is evidence. There's always evidence. You just have to know how to find it, and you have to be on time to capture this hard drive embedded in a printer, because over time the records are rewritten, and once they're rewritten, it's much harder to investigate.
I just wanted to mention that, there is one particular problem with, there is a separate question of establishing a fraud and getting your money back. Oh, yeah. So basically, follow the people if you want to, if you want to get fraudsters, if you want to put them to justice or whatever. But if you just want to get your money back, you might not even be interested in finding out who the fraudster was. It might even be a deal, at least, I don't know, maybe someone has personal experience. To my understanding, there are so many first instance high court judgments put in injunctions, but then no trace of these cases going farther, because most probably there was a deal, there was a settlement, there was the money back, there was some compensation, because they just didn't want to go farther. Yeah. And coming to these. And there is a concept of traceability in common law, which means if you got the fraudster but you didn't trace the assets alongside, you might even know that this fraudster committed the fraud, but he might or she might be, or the company might be out of funds, and you have a fraudster, you're pretty certain that this person committed the fraud, but no funds. So my point is that you will always need to combine both. You will always need to fight like two battles at the same time.
Very good point. Yeah, I don't try to diminish the importance of crypto tracing, because we've received crypto tracing reports from specialized providers who just analyze the ledger, like Bitcoin ledger. It's open, as Henry said, it's open data. Or you can go yourself into Bitcoin ledger and pull the transactions. You'll just see the lots of digits and symbols, and you will have it will be difficult to make sense of it. But once this tracing is done, as far as I know from experience, it's very hard to take it further without that first element. If we successfully investigate, traced crypto, identified fraudsters and assets, the last question, most important question, can we actually recover? And this question is on the slide. It's for you, Viktor. What enforcement tools are available against crypto fraudsters who are proven to commit fraud, who are proven to have let's say, hundreds of stolen bitcoins in their account? Can you actually get this bitcoin out of them?
Yeah, I mean, that's coming back to what we discussed, and yeah, that basically if you manage to trace the assets themselves, then you will be able to get them back. Yeah, if you didn't, kind of end of story. Yeah, you might then sue them actually if you establish a fraud and they do have like other assets, because the idea with specific assets, if you can trace specific crypto stolen from you and it ended up with the specific fraudster, this is the concept of constructive trust established by the English law, saying that they hold these particular asset, these particular funds for you in the constructive trust. But this is bound to particular asset which you follow. And I'm not certain how you should approach if you, for example, the specific fraudster, if for example, you did not manage to trace specific assets back to them. And the problem here is also, you know, of the value, yeah? So if, for example, you have a claim of £100,000 or less, or I will say everything less than £1 million, yeah, then you will not get lawyers interested in your case, yeah? And there is also current implication of getting class actions, well, yeah?
Let's assume we have big enough case, we have a few £1 million, we found the fraudster, we found that he stole money from that victim through the crypto scam. He lured the victim into believing that this is a good investment, it was bad investment, the money were taking to his wallet and through the money laundering mechanism which I showed. Still, even if you have a judgment, can you actually take this crypto from him? Because as far as I understand, crypto wallet works, you have a private key and you have a public key. Private key, if you know it and you don't tell anyone, it's basically end of the game. What can you do?
Got the question.
Yeah, court will tell, okay, Viktor, now go and enforce. And I'm a fraudster, for example. You talk, give back your crypto. And I forgot the private key, sorry.
Yeah, I got your question. I do not have, honestly, I don't have an answer for that one. What happens if your fraudster is not happy returning the funds? Yeah, But I would say that usually you will have this groundwork done before. So you will freeze the wallet. You will say, okay, this is the fraudulent funds. And usually anyone who can manage the ledger can then deal with the assets. Like the example of the case which I like, I mean, Dr. Wright and tulip trading, yeah, there are many questions arising of this nature. And he was actually tried to make the Bitcoin developers and Bitcoin, involved in the network management to deal with the assets he lost, because he traced them, he knew where they are, and he said, okay, you can guys help me. Yes, I lost my private keys. Yes, I do not have these access to these assets anymore, but you can help me. The court is this case is still not finished. This particular part of cases was reversed on appeal, and and it is now the question for future whether it will be litigated at all, because Dr. Wright just lost quite a big part of his game in other court judgment. But the point is that there are several innovative ways how you could approach that. The easiest way will be that there is a key keeper. So the crux of this case, for example, was that what developers were arguing, they were saying private keys is, I don't know, like Magna Carta or something untouchable in the sense of crypto world. So you cannot just say to someone, or use your, or just transfer these funds from this ledger because we ask you. No, that doesn't work like that. It should go through the ledger. It should go, as Henry explained us in the first half, in accordance with particular rules of how ledger works. And if Bitcoin developers or developers of any other chain will try to meddle with this logic, the trust is not there anymore. So basically, this idea of decentralized network works as if you trust it into English bank or US Treasury issuing the notes. So that is the concept of which you're meddling here when you're trying to kind of go around that. But coming back, I'm sorry, I'm getting too much ideas in one basket, but coming back to the question of, how you could actually enforce that, there are two ways, Either you did your groundwork before, and then you basically enforce by using like, Binance. You might find assets of this particular like fraudster on Binance, Then Binance will just comply with the judgment, assuming that the fraudster is like holding account there. Or if for some reason you didn't freeze anything, but you know that these assets with this fraudster are on his cold wallet, Now this is a question of, of a deal with that particular fraudster. I guess there are quite a few maybe criminal law tools to achieve balanced solution where the fraudster will be interested to release the funds rather than go to jail for longer term.
If that's possible, it's a good question, but I don't know if it's possible to stop the criminal proceeding once it's started. We have maybe 1 minute or 2 minutes for Q&A.
Should we invest into Bitcoin?
My experience was not good, because I think that you have to understand something really well before taking an investment decision. Even with stocks, it's the case. Unless you're a professional investor and you know how the particular stock market works, you shouldn't go. All the big investors, well-known names, are professionals in this. Same with Bitcoin, I think. You have to understand Dr. Hillman's technical part well first before doing it.
I guess the rule of thumb was with the crypto investments is that if you are happy to lose it, so basically that's rule of thumb. Investment of portfolio management, you have 100% of your like wealth, you can take 3%, 10%, whichever percent you are happy with losing, and putting it there saying, okay, if it's lost, it's lost. If it gets doubled or tripled, then it's really good. I mean, that might be sound approach to keep you, like, out of depression, out of the all other.
Psychological traits is quick win. If you remember the first part, it's a desire of getting quick win and lack of regulation and acting on influences. That's Dr. Hillman said. People make investment decision based on a small community of influences. They don't trust mass media. They don't watch the Financial Times reports, don't read The Economist. They just go to social network, X, Twitter, the more specialized on NFT. There's a lot of like small social networks, and they listen to some so-called influencers there. And you really don't know who is on the other side of the receiver. Coming back to what Dr. Hillman said, you never know who is advising you. So my strategy is very conservative. I wouldn't repeat any investments in Bitcoin personally, but this is personal opinion.
But clients, please do.
We have a lot of work, unfortunately, investigating.
Not an investment advisor,
Thank you.
Thank you.